Let's break down the key differences between Bitcoin and gold, their long-term prospects and potential risks. What do gold and Bitcoin have in common? Both assets are seen as alternative means of preserving value. Both are limited in quantity. Gold is a physical resource whose supply is limited by nature. Bitcoin algorithmically limited to 21 million coins. Both are independent of central banks and fiat currencies. But despite these similarities, there are many more differences. The first one, historical relevance, gold, used by mankind for over 5,000 years as a medium of exchange, wealth and investment. Central banks and governments hoard gold as a strategic reserve. Bitcoin, on the other side, only 16 years old, it remains a young asset on the scale of history, still perceived as an experimental technology rather than eternal value. What conclusion should we make? Bitcoin has yet to pass the test of time like gold. Gold has proven its resilience over millennia. The second difference, market capitalization. The total amount of gold in the world, 15 trillion, is one of the largest markets among all assets. Central banks hold 35,000 tons, about $2 trillion. Bitcoin's market capitalization, 1.2 trillion. That's 20 times less than the gold market. In order to catch up with gold, Bitcoin needs to grow 20 times. So, what is the conclusion? Bitcoin cannot compete with gold in terms of scale, but it has the potential to grow if its perception changes. The third difference, volatility and stability. Gold, slow but steady growth. Its price is stable and doesn't fall 20% in a week. It is used as the main productive asset in times of crisis. Bitcoin, price spikes. In 2024, Bitcoin could rise 30% in a week and then fall 20% in the next week. Huge influence of speculators. Large funds can easily manipulate the market. What is the conclusion? Gold is an anchor for investors in volatile times. Bitcoin is still a volatile asset that not everyone is willing to hold long-term. The fourth difference, regulation and legal status. Gold, legally recognized by every country in the world. Central banks accumulate it as a reserve asset. Gold transactions are subject to clear laws. Bitcoin, restricted or banned in some countries, for example China or Turkey. Some governments are increasing tax controls and requiring disclosure of Bitcoin holders. SEC and other regulators are constantly introducing new regulations for cryptocurrencies.